to get your view on the metal space, but for the time being, let me just take the viewers through why, in fact, the metal index is on fire today. Both ferrous as well as non-ferrous players, they are rallying. Let's address the tailwinds first for the non-ferrous players. The dollar index cooled off. The US and the UK, well, they have imposed restrictions on Russian metal trading on exchanges. Now, we have copper, aluminium, zinc prices, all of them are at multi-month highs. As supply concerns persist, there's also potential higher demand that is expected from sectors across EVs as well as infrastructure. But what's working for ferrous names then? You know, the Singapore May iron ore futures, they have jumped up to around $118 per ton. Earlier this month, it was sub $100 per ton. So that's one big factor. And the key reason for today's bounce is that the fourth largest iron ore miner, that's Fortescue, they have missed their guidance for the past quarter. They've also trimmed down on the outlook for annual shipments. Now, a key beneficiary to higher iron ore prices will be NMDC. While domestic ferrous players, well, they're better placed on rising iron ore prices. And let me explain this in further detail. Why are domestic players well placed when iron ore prices are moving up? SAIL and Tata Steel, they're backward integrated. So all their iron ore is coming from captive sources. JSPL as well as JSW Steel, they're partly integrated. Now, along with better availability, there's also iron ore pricing advantage here in India. Steel spreads could also get a bit of a booster shot. There are reports that suggest that steel price hikes are being pushed through. Coking coal cost, well, they're much lower than what we saw in the previous quarter on an average. That's quarter three, it was more than $300 per ton. Now it's hovering around $250 per ton. And expectations are that China's production will be limited. Exports will reduce in the second half of this calendar year, with the marginal improvement in demand that's expected in China, which will be positive for the steel sector on the whole. Well, the other stocks that are in focus include MOIL. There are expectations that price hikes could come about because global manganese ore prices have spiked up owing to that disruption in the Australian mine, while IMFA as well is holding steady because chrome ore prices have moved up, which will support ferrochrome, and IMFA is backward integrated with chrome ore. So that's a brief analysis on why ferrous, non-ferrous, and a couple of these plays, on the ore front, the mining front, all of them are doing well. Prakash,